Last week we went over kind of what do you do after you close the file, how do you maintain that relationship. There's a lot of system out there. These are the system that I use. If you guys have something else that's better, or you guys feel that we should look at it as a whole for the company, it might integrate a little bit easier, let me know. And then today, what we're covering today is sales presentation. So if you're in front of a client, or you're maybe at with a real estate agent, referral partner, attorney, any type of people that you normally get business from, the difference is that your consumer, the homeowner, would only probably refinance every so often, whereas a referral partner can give you referral every month, give you business. And this is designed for both that one-time customer and also long-time referral partner. I'm going to kind of give you the overall on what it is. Mortgage Coach Edge, they've been around. They've been one of the front sales presentation software out there. I can remember them back as early in the early 2000s, and they really excel. So that's who we use. And most of these that you're looking at, Mortgage Coach Edge, Total Cost Analysis, Seller Buy Down, the RateWatch, they're all tied in as one package. Okay, and full disclosure, I don't work for the company. I don't get paid by them or anything. It's just tools and system that works. But I think they do give me a month free of whoever signed up and mentioned my name. So don't forget to mention my name. And then the Loanshifter is the other program that we use to price out the engine, but also be product eligibility. That one, we're going to cover the open house flyer, but I also wanted to show you that Mortgage Coach Edge also does the open house flyer. All this is sales presentation, guys. This is all about making it look pretty and dressing it up and giving them reports, and making it look fancy. So if you guys are looking to how to do loans I'm assuming at this point you know how to do a loan, you know how to provide the loan option, the IFW, DSP, and this is all making it glossy, okay, or flossy in other words. So now I'm going to bring you up to Mortgage Coach Ed, because this is where we're going to spend a bulk of our time today. And feel free to stop me if you guys have any, or want me to go more in depth. I'm going to give you an overview. I'm going to give you links to learn how to do it yourself in more details, and you can kind of play around with it. I believe they do give you like at least a 7 or 14-day trial, so you guys want to test it out for yourself, you can do that. This is less of a how-to and more of what do you do with it, on how do you use it to get more business. So it's all about sales presentation. And then the RateWatch, we're tied into how do you read the RateWatch. So how do you monitor the interest rate? When do you advise your client to lock in the rate? What are you really looking? What are you gauging? All right. So let me see if there's a question here. The video's working. I can see and hear you. Great. All right. So this is straight from the Mortgage Coach. If you guys want to go here, you go to the Mortgage Coach. I just printed out the PDF so I can hand it out to you guys. So in front of you in the packet, the first sheet you'll have is this packet here. And this is kind of give you ideas of when you would use it. So these are actual loan officers. They're, they were loan officer, they are loan officer, but one point they were a loan officer and they created these presentations. So I'm going to give you guys a look on how they use it, and then that'll give you a full idea of what you would use it for. So to kind of see it, this one is don't wait to move up, meaning for somebody who's own a home right now and they're looking to buy maybe a bigger house or maybe move to a better school district, you can give them an incentive to buy now. If somebody is looking on maybe a refi, DU refi, which is the Refi Plus program, where they're underwater, they owe more than what the house is worth, you can show them a comparison for that. The benefit of home ownership, that's basically a rent versus own analysis. And you can see the Edge presentation, they typically have 3, but they use it differently. You have a total cost analysis saying, what is the cost to refinance? When do I recoup that cost back? That's the total cost analysis. And when do I start saving over the life of the loan? The rent versus own is just comparing, hey, you're throwing money away in rent, but you can build equity over the 30 years that you have the mortgage. Then we have why should you pay mortgage insurance? Rate versus no cost refi, cost of waiting, building wealth with home HARP 2.0 refi. That's the same as this DU refi comparison. And then you have your loan GPS report, refi with term reduction, refi option depending on appraisal, refi point versus no points, refi option 20-year versus 30-year, home buyer purchase option, down payment and MI options, and should you refinance purchase option, and also a second purchase option, which is more for the open house flyer. So we're not going to go over all of them. I did print out the one that I did want you guys to notice. The first one that we have in your packet, your stack, and this is what it prints out. If you, and I'm going to pull it for the audience at home, the one we're looking up is selling to move up. This is our first one here. And this is all web-based. You don't need to install any software. It's all web-based. You need an up-to-date web browser. And in this presentation, and I don't know if this volume you guys can hear. If you haven't noticed, this is actually meant to be sent to your client and kind of get them off the fence. It's to help them push it, see actual number. This is calculated. But if you haven't noticed, he also put a plug as if he was speaking to a general audience. This link here, if you wanted to, a lot of the loan officers do this. They put it on social media, such as Facebook, Twitter, Google+, all that, and they just put this out there. So not just for a general, a client in particular, or a real estate agent, you can send it out and kind of give it to all your Facebook friends. And this is what they did as a general type of sales presentation. But all this, if you click on more information here, it actually breaks down and tells you, there's a lot of toolbars here. Let me see if I can get some. Okay. So on here, if you look at this, you can see the payment breakdown under principal and interest, if there were property taxes, hazard insurance, mortgage insurance. So the IFW that we create internally, and we went over that on the third training session, you can actually use that IFW to create this, and that's how we create it. I was just kind of explaining that they use this for general marketing, and that you can use it on social media. But on here, if you have your IFW, your initial fee worksheet, you can build this out and have a different loan option. And we're going to go into that in a little bit here. But I wanted to show you that there's a lot of different tabs that can break it down and make it easier for your average consumer. Because if you give somebody an IFW, initial fee worksheet, it's not as neat and clean as this. Okay. So I'm going to show you a different one. This was meant for the costs for, or actually selling to move up. I want to show you another one. Is that on the other sheet that you guys have, which is the one after this, is rent versus own. So I'm going to pull this up for you guys. So I'm going to skip the video, but you guys get the point, is that you would record yourself, and it would play as soon as the client click on the link. I'm going to skip all that, but what this does is stating that if you were to rent here for, right here we have a total rent of about $1,350, and if they were to buy a $180,000 condo with 5% down, their total payment would be about $1,500. But because of tax benefits and the write-off, the mortgage interest write-off, you would be able to take off $230. And then out of that $1,500, it would pay towards your equity, your principal on your loan, at $211. So your net monthly payment is actually less than your $1,350. And it's saying that overall, your out-of-pocket would be about $376 less. And this is comparing, if you notice there's a 0 here versus 85, it's comparing it to the highest number we have here. Okay, so which is the highest net monthly out of these. These 5 numbers, 1435 is the highest, so it benchmarked off that. And this is based upon the purchase price and the cash to close. And over the 60 months, this one would net you about $14,000 equity, whereas renting would cost you $86,000. You have nothing to show for it. This tool will do that for you, and it has helped people understand it a little bit easier. Everybody knows the benefit of home ownership, but when you put it in dollar amount and it pertains to them within their price range, it makes a lot more sense. And if they say, oh, it only cost me, $8,800 to buy this house, or $12,000, I can pull that off. And that's what this is designed to do. Again, on this net monthly payment, if you click on that, it will tell you a little bit more information on the down payment, the closing costs, and then the cash to close. Okay. And there are assumptions that they're taking, which is the rental increase and the property appreciation, along with what tax bracket they are, and that's how they come up with all this information. The net worth in 10 years is if you look at the math, and people have asked me, how do you come up with this net worth in 10 years? If we look at the total payment that they would have paid over, and you can change this number, over 10 years, they would have paid this much in rent, this much in mortgage payment, based on a 180, 220, 250, 300. Out of that, they got nothing, no equity, whereas this one would have paid down their loan by $32,000, $40,000, $45,000, and $54,000. Their tax benefit, meaning they would have received more, this much more in tax refund, would have been this much. So their net costs, this guy still put out $185,000, but because this guy got money back from the equity along with the tax benefit, he's only at $121,000. And then because this one, he doesn't own any real estate, the house value went up. And if you took the net costs and the real estate value, you would get the $142,000. Okay, so the loan balance is actually the principal paid minus your original balance. Let me start over here. Your loan amount minus your principal paid, you would get your loan balance. And then so the total equity out of that would be $99,000. So you'd be $99,000 richer, up to $165,000, depending on that. And you can change this number to whatever it is. A lot of people would say, well, I don't plan to stay in this area for more than 5 years. And we say, that's fine. You can stay there, and let's kind of see what that looks like. The difference between this rent versus principal paid is just one number. This net worth tells you a little bit more. Okay. And when they do hit print, for those at home, you guys can't see it, but we actually have print out here. When you do hit print, it actually prints out in 2 pages, and this is what it looks like when it actually prints out. This is for the rent versus own, and then the total cost analysis is actually a little bit more in depth. They'll have 4 pages. So this is another way for those that are buying. It's usually used for first-time home buyer. If you have a lot of first-time home buyer that you're working with, then you can show them the benefit of home ownership. And I'll show you another example that you would probably use this sales presentation tool for, would be the refinance, and it would be the rate versus no cost refi. So I'm going to open this up for you guys. So a lot of people would say, why do I even want to refinance if it's only saving me like 0.25% or anything like that? If we can do a no-cost loan for them, or actually, let me see here. Let me just make sure I got this. Yes. So they're saying, okay. So this one is actually if you apply that extra payment. So if you don't, right now the current payment is at $21.15. They're at a 5.25, and we're going to get them down to 3.25. With that 3.25 rate, they're going to just save $436.91. And if we actually apply that 436, they just round it up to 437. But if you apply that, instead of having a loan that you've already paid almost 5.5 years, a little over 5.5 years into it, instead of resetting the clock and paying it for a full 30-year, it'll save you $437 a month. You can apply the same payment that you're paying here, the $21.15, and actually reduce that time from 24 down to 19.25. So just applying that payment to the same payment that you're paying right now. If you're comfortable with it, pay it. It will just pay off sooner. The best way to explain it to client is this. If I took my calculator and I took my current term right now remaining is 24.42 years, and it's gonna knock it down to 19.25 year. I would have saved 5.17 years. If I timed up by 12 months, I would have saved 62 payments if I continue paying that. So the people might say, well, what's the difference? I don't, this works best. The example I'm trying to tell you works best when it's about $50 to $100. People's like, what's the big deal? But usually when it's in the hundreds and they're like, yeah, I definitely want to save that amount. But if you show them this here, 62, and right now, if we click on more info, their principal and interest payment right now is $17.11. Even though their total housing expense is $21.15, property tax and homeowner insurance remain the same across the board. So that's not your payment. You just look at the principal and interest. So if I can save them 62 payments, and right now their principal and interest payment is $1,711.83, that means I can save them $106,000. So that's the easiest way for me to explain it to somebody, for them to see how much I can save. It's way more than that. So if you look at the 106 here, and we kind of look at the difference here, you see that I calculated is that it's going to be about $106,000. But on here, interest and MI paid, they would have paid a little bit about $61,000 more in interest. But this is only in half the time, so in 15 years. So that's why I do that. If I can save you this many month payment, it actually give you an easier number to understand and usually a higher one. Unless you pull this out to maybe 19 years. Okay. So I got a bunch of hands here. Let me see what's going on. Okay, so do you attach to email or what? Okay, so how do I use it, right? On the, so I guess the people who couldn't hear me earlier went to the website and looked, watched it. How do I use this? I actually send it to them through our template. We have an email template, and in that email template, it would say click here, and it would attach this link. It's a shorter link, and I would put a little explanation of what I'm trying to show them. And I keep it very short, one sentence or less, and I would just tell them something to this effect. I would say, if you refinance and continue paying the same payment, I would save you 62 months worth of payments, saving you over $106,000. Usually, when it's about $20,000 to $50,000, I always throw in that little thing. I said, wouldn't you like to afford a new car for your college, for your kid when they go to college? And usually, if they have young ones, about 10, 15 years to think about college, and it usually works for me. So I kind of say, would you like to afford them a new car? And change nothing. You're paying this payment anyways. So how do I subscribe to this with our logo on it? Once you go to Mortgage Coach, you sign on. There's full instruction, and I'll get to that on how you can set it up with your own logo and all that. These are all demos. These are for lack of a better term, the best of the best that been used for Mortgage Coach. So I took these example instead of creating for you, but I'll show you the behind the scene kind. But I want to show you what, in more than one instance, how you can use this. So this is applying an extra payment or that additional savings into your payment, and it'll reduce your term. So we're going to refinance them into a 30-year, but they'll pay it off in 19 years, or about less than 20 years. Okay. And then we will move to the next one. If you guys in your packet, you'll see one that said your total cost analysis with John and Teresa Espino. And let me just make sure I got the right one here. So on this one, we have the refi with term reduction. It kind of does the same thing on as far as the what is it? The one we just went over as far as applying the principal. But what we're looking at is that this one is like an interest-only type of loan, and the payment might be, and you see how they owe $181. This one owed $200,000. And this one is going to reduce the payment by $1,000, and it'll reduce it by 10.5 years versus the 14 years they have here, even though we're going to borrow more than that. So this is showing kind of the cash out. If you want to get cash out but with a lower rate, you can actually borrow more. The payment's going to be lower here, so we can do like an interest-only payment. But with that interest-only, we can pay that, and then it'll actually pay down a lot more. And this is where they'll still get cash out of $15,000. So we've shown that they can have a lower payment, paid off in 10.5 years. And this is where people said, well, why would I want to get cash out? It's going to only extend my term of repayment. So you can use that for here too. And let me show you the other one, which is the point versus no points. So on this one, no points, no closing costs. This is a good one. You guys should learn how to do this. Essentially what you're doing is, instead of getting today's best market rate, you're going to take a slightly higher interest rate. And with that slightly higher interest rate, it pays for all your closing costs. People say, well, I want the best rate. What is your goal? Are you trying to pay it off sooner? If they are, then they want to buy the rate down as low as possible. But if they want to reduce the overall costs, we can do a no closing costs. So if you look at their current loan amount, they owe $199. We can actually do it with a new loan, owe it at $198. Still give them a savings on here. And the cash to close is very minimal. It's at $11.99. And they'll save about $131 a month. And right here, if you see where it says the 23.17 years, and this is 25 years. So we can show them we can do a 25 years. It'll save some money. But why not just kind of pay a little bit more? If you look at the total payments, is $1113.99. This one will increase it slightly to $1135, but instead of paying it off in 23.17 years, we'll pay it off in 20 years. So we wanted to show them that there's no points, no closing costs, and the cash to close. If we click on this here, we can see where that cash to close is coming from. And really, if you look at the cash to close, this amount, which is the $11.99, is essentially paying down their balance, because they owe $199, and our new loan amount's at $198. So there is no closing cost. It's just bringing in to pay down their balance. People would do this if they're at maybe a 91% LTV, and if we just come in with that 1% to bring it down to 90% loan to value, then it would give them a better rate. So we want to convince them, hey, come in with low cash, we do no closing costs, and it'll still save you some money. Okay? So this is another one where you have somebody where they said, well, why would I want to pay more? Slightly more, about like maybe $22 more a month. We said we can save you, again, 3.17 years. You take that if you took 23.17 years, which is what they're currently on the track to pay it off, minus this 20 years, that would give you 3.17 years, and you times by 12 months, we get 38 months. We go into this more info, and you click on whatever they're currently paying at principal and interest of $1,113.99, and you times that by $113.99. We say, well, you might be paying a little bit more, but we can save you over $42,000 in payments. That has been the easiest way for me to explain people, and people get it. They just said, okay, I'm going to save 30-some months, I'm paying this much, but in reality they save more. So if you want to say at least, it is very safe to say at least $42,376. Okay, so this is another type of strategy for you to have somebody pay a little bit more, but the overall benefit is greater than that. Okay. And then another one I want to show you is the flyer, the open house flyer. Last week we talked about the open house flyer within Loanshifter, and I'll bring that up again just for you guys to see it. So the one I showed you last week looks something similar like this. The reason why I like using the Loanshifter, it actually gives you today's pricing of whatever the rate is. It's not as fancy, it doesn't look as great, but it does the trick. For those of you that like to do open house, it can be templated. You change a few things, you go in, hit a button, it updates the pricing, you print it out, you're off to the open house. It doesn't take that much work, and it's accurate with the pricing. Okay, so here, these are the three options. You can have up to 5, 6, but the more you have, it starts getting crowded. I would suggest no more than 4 or 5 for this, but at the same time, and I just picked somebody off here, and I just put their info here. So it'll co-brand the real estate agent. We have the disclaimer, and then that'll protect everybody here. Okay, and I wanted to show you what if you were going to use Mortgage Coach. On the Mortgage Coach, they do have an open house flyer also that you can use for your sales presentation when you're sending that open house. And you can send this to also solicit business from your real estate agent and let them know, hey, if you ever need this, just let me know. It'll take me 15 minutes to draft it up. I'll email it to you. You can print out as many as you want. And then you can have your information here, their information, it'll be co-branding. Some of the property feature, in my opinion, this looks a little bit easier and less intimidating than the other one that I showed you over Loanshifter. But the problem is that this one you got to update the pricing, the fees, everything manually. Okay, you got to transport it in. So this is what the flyer would look like, if you can kind of see. I think, in my opinion, it looks a little bit more aesthetically pleasing and easier to read than the other one. So, and you can put as many loan options you want here too. So this is another way that you can use the Mortgage Coach to do open house flyers, and you can have a different type of loan program here, along with highlighting some of the feature in the home and also having a tagline there. Okay. Then I wanted to show you another strategy that you can earn with real estate agent, and it's the seller buy down. This is very powerful if you guys know how to do this right. And let me see if I can pull it up. On a seller buy down, the idea is with real estate agent here, you guys can relate to this, and you guys probably even heard the strategy, but how to do it and how to explain it is an art. You can go to a listing, and typically in a competitive market where it's maybe a buyer's market, they would have to reduce the price anywhere from 3, 5, 10% to make it work. If you show them a way where everybody wins, meaning the buyer, the seller, the listing agent, everybody, is that you do a buy down. Instead of reducing the purchase price by 3, 5, or 10%, you take the like 3% to buy down the rate. And if you buy down the rate, the overall saving over the life of the loan will accomplish a few things. One, it will open up the purchase market to less qualified buyer. It will require less income. So on this particular situation here, is that the sales price is at $995. If we reduce the price and down to, let me just make sure I got my math correct here. If we reduce the price by 3%, that means we would have sold the house for $965,150. The down payment still required 20%. The rate remains the same here at 5.65, 5.625, and the approximate cash to close would be about $205 versus this $199. The monthly payment would be $56.15 versus $54.50. That means somebody would have to have an income, annual income about $149 versus $145. So there's a savings of $165, and you reduce the price by $29,850. However, if we tell the seller, take that same 3%, you will open up the pool of qualified buyers, along with making it a benefit for the home buyer also. So if we look at the same we keep it at $995, so the listing agents still get their commission a little bit higher, correct? And then you can, instead of a 5.65, we're going to buy down. We're going to take that 3%, buy the rate down almost to a full percentage point. To 4.875, and again, that 3% should buy it down 3/4% or so. Okay, with that lower rate, your monthly payment drops from a $56.15 down to a $52.45, saving the buyer $307 per month. It's the same cost to the seller. It doesn't change anything for the seller. They're going to net the same amount. But now, instead of having somebody having to require to earn $149,000 or close to $150,000, we can qualify that borrower who makes slightly less, and they can qualify for the loan based on the debt-to-income ratio that's required. So on a seller buy-down, we want to show them that the same 3% to the seller, if you do it to buy down the rate, you can open it up to a larger pool of potential buyers. You're going to save them more per month. And if you were to do the same, to get the same monthly payment right here at $52.45, not only you would have to drop your price down by $80,000 in order for the monthly payment to net the same. So we do this to just tell the real estate agent, hey, if you ever run into a situation and you want to talk about seller buy down, what the benefit, why the seller would want to do this versus reducing their price, you can do this. And plus, it keeps the value in the neighborhood higher. So everybody wins when you do a seller buy down. Okay. So I'm going to check some question. I'm pretty sure there's a lot of question here. Please explain how the amount is the same for the seller if he drops the price. Okay. So if he drops the price to this 29,850 is 3%. So if we took 995 and we times it by 3%, it's 29,850. So the seller is gonna net it's gonna lose that 29,850 anyways. Then you're gonna have then if instead at 995 he takes the same 3%, instead of reducing the price, he gives it to the buyer in a seller's concession, basically a seller's credit, and the buyer used that 29,850 to buy down the interest rate from 5.625 down to 4.875. And the rate's not important, and it's just to illustrate that the monthly payment and the interest earned over or paid over the life will be, or the payment's going to be lower here. So the interest rate, it's irrelevant at this point. But of course, the higher the gap between those interest rate, the more savings. So hopefully that makes sense for you there, Risa. So the seller would net the same. He's giving that 29,850 away. This one, he's giving it to the, both of them is going to the buyer, but this one is dropping down the price. This one is using that same amount to pay down the interest rate. So the seller is going to net the same. It benefits the buyer more, and it opens up the pool of how many people can qualify for that loan, to buy that house. Okay.
I guess the question is, if the seller is selling the price at $995 and then they're giving $29-something thousand, like 3%, doesn't that reflect on the purchase price as far as, when, the seller's not cheap?
Right.
Towards the end,
yes.
It'll still be at $965 or something like that from the netting.
Right. So then they'll net the $995. And on here, if you look at this, is what we're trying to, again, there's always two sides to the coin, and meaning that we can advocate for one or the other. I'm advocating on the mortgage side, obviously, right? But I know your thing is, what about the tax implication on the seller if they have to maybe net a little bit higher? That is a valid point too. But what we're trying to say is that right now, you're in this price range, and you might be missing that pool of buyers who doesn't quite qualify because they're not making at least a 150. They do make at least 140, and it opens up that pool. And if you ever notice kind of the when listing agent they draw that pyramid and they show that 3% on top. The higher the price, the less audience you have. So you kind of do that.
Well, I guess what I'm trying to get at is, how does this benefit the seller, or how come the seller's price is still at $995 if they're getting a credit?
The credit, the 3% will buy down the interest rate. The seller's credit, the seller is still doing a 3% concession, so it's not reducing the price. It's giving part of that $995 to the buyer, and the buyer is going to use it to buy down the interest rate to pay discount points.
Right.
Mm-hmm.
But I guess what I don't see is
sure.
how's the seller still netting $995 when they're already giving?
No, they're not netting. They're not netting. What we're comparing is a price reduction versus a rate reduction. So they're still getting the $965. So this is $965, $150.
Okay.
Right. Yes.
So right there. Okay.
Yes.
So you had it on the listing and there's no offers at $995.
Yeah.
Your option would be, I got to lower the price, or do it buyer or sell.
Yes. So one would attract, in the real estate model, people who are price conscious. Another would attract somebody that really loves the house but they cannot qualify. And that's where our thing is. You can have that buyer that kind of borderline qualify, and we can get them qualified by using the buy down. Okay.
So instead of just giving a 3% credit, they can do a buy down.
Yes. Well, the seller's still getting the 3% credit. We're just going to, how do we apply it? Instead of closing costs, we do it on the discount point, and it opens it up. So sometimes, they're kind of borderline in that. Okay. And to the seller, so right here, if you look at the thing, it's all about opening up the pool of qualified buyers. And it's saying, ask how to purchase this home at full price with 7% less income needed to qualify. So our whole selling point is that we can open it up to a pool of less qualified buyers that are interested, and it wouldn't cost the seller anything more or less. But the reality is that they would most likely, well, actually no, they wouldn't, because they can write off the 3% seller's concession off the offset. So it's the same thing. Okay. So there's a question here. Okay. All right. I know the seller buy down is a new concept for some, and it's been in the industry for a while. Any question on how that seller buy down works? Okay. And there's permanent buy down and temporary buy down. The temporary buy down is the 3-2-1 or 2-1. What it does is it reduces the interest rate. If you did the 3-2-1, it'll temporarily reduce it by 3% on the first year, 2% on the second year, 1% on the third year, and then fourth year is at the regular rate. That's a temporary buy down. Whereas a permanent buy down in this one would be that the rate would be bought down for 5.625 permanently throughout the entire the life of the loan. Okay. All right. So this flyer here, and it's just saying how a simple seller's credit towards the buyer's interest can produce significant monthly savings for the buyer. Points are deductible in the year property is purchased, but for the buyer, please consult. So it's just really the seller buy down program. And the concept has always been there. This just makes it easier for you to explain it to a real estate agent and give them an actual listing. So a lot of loan officer, what they would do is go and find a listing and just make one and just send it to the listing agent. Say, feel free to use this at your open house, and they can print it out. And that way they can get their face out there. So you can do your sales presentation that way and possibly capture more business. And it's not it doesn't take much to do. It does take some time, and I'll show you how simple that it can be to do that. And I don't know if, okay, so I don't know if these hands, Josephina, Nova, and Riza, I don't know what the hand means. You guys got your hand raised. You guys want to ask a question? If you guys do, just feel free to type it in, and then I will check it. Okay, and then I also wanted to show you is the Loanshifter, which is the last handout you have in your sheet here. On Loanshifter, there is, let me see if I can pull it up. I don't know if... There's a template that we would send out to your referral partner. And every day, depending on how many you want, we usually just show one option. But I wanted to show you that it can show more than one. So on here, you can reword it whatever you want. But to better serve our real estate agent, financial, and referral partner, we here at ERS have prepared a brief summary of mortgage rate for the most common loan program. Please note that rates vary greatly depending upon credit score, loan to value, property type, occupancy type, and documentation type. So on here, if you look at the discount point, you can buy it down. So if you look at the bottom, and usually I only show one, but you can show up to 10 of them if you wanted to. So on a 15-year, if this is, and this is not set correctly, where you're making, this is at par. Basically, you're just collecting the bare processing and so forth. But I want to show you that the rate can be as low as this, even though people are advertising 3.25. 3.25 will get you compensated that 1.5 to 2.25. But if somebody offered 3%, they can. It just means that they're going to charge more for the origination. Okay. So the lender's not paying for that. So here's the rate for 30-year, here, 3-year ARM, 5-year ARM, 7-year FHA, VA. So we send this out to our real estate agent, and I know that a lot of real estate agents just say, what's today's rate? They just open it, glance at it, and they close it. But they appreciate it, and your name and face is out there. Okay. So this can be set out every day. And I typically put click here for my newsletter. They click on here. They can go to my website, and they have our weekly newsletter. And this is what we're going to be offering for all of our agent, by the way, for all the loan officer. It would just be a generic ERS logo here, and this updates. So this is always on a Sunday, and it'll tell you what's going on, a short snippet here. I have some economic snapshot, what the current LIBOR and rate and indices are, what the average rate is. So if people said the average rate 4.32, it went down from last week 4.5. This is the national average. and then I have a little joke here, but this will have your just the ERS. If you want your own and you want to do this, I think it's like $45 a month for your own do that. No, just your own logo and all that. But for what we would send is on behalf, it would say on behalf of your loan officer, Ed Bautista. It'll say that, and it'll have your picture not in the newsletter, but it'll be within that email itself. Okay, so it'll have your information. It's just not built into it. It won't have my information or my face or anything. It'll just have a generic one. This is just mine. Okay. So we're doing that for you guys, and then I typically put my link to apply online. People actually do, believe it or not. They go here and they do that. If you guys don't already have some of the free website, I think you can go to. It's fairly inexpensive. There's a couple that I do want to let you know about. I think a la mode is one of them. So a la mode right here, if you are like a mortgage pro, you guys should have a place where you can take the loan app. And of course, once we build it on the mortgage division, everybody will have it. But during the meantime, while you guys want to get set up, it's not that expensive, I don't think. They actually offer it free before. So check it out. I think if you want a simple one, Excite right here. And here's the pricing. This is like $2.99 a year for a website, which is, what is that, like $25 a month? And it's already it has everything, so you don't have to get a website and put some thought into it. You just put your information and it has everything in there. Another one that if you guys don't have a website, go to vlender.com. These are your two most common templated website that you can get, and you can customize it. Yeah, vlender.com. So if you ask anybody who's been a mortgage broker, they'll refer to these two. These two most popular, easy to use. You can change stuff on the fly. It looks pretty decent, And for those that are interested in what I do for my website, you guys can go to 220marketing.com. This is who I use. And they just have Flash. It's a little fancier, but it's all that. So, and by the way, if you like somebody's website, go to the bottom. You can figure out who does it and just call them if you like somebody's website. 220 Marketing, and we do lead generation on this, and I'll kind of lead into that a little bit later. But get a website, and again. You have to be patient. I took on this, but I do fully intend to take you guys where we provide everything. But during the meantime, we don't have it. You can go get it. Okay. And I do recommend you guys put it in your email signature, your online social media and all that stuff. Okay. So now I'm gonna, before I kind of lead a little bit further, I'm gonna check the question, but I'm gonna show you guys. Hold on here. I'm going to show you guys what it takes to do all that. So now you guys know the purpose. If you guys are okay with not interested, it's fine. You guys can sign off or you guys can leave, but I can show you a little bit on how to do it. And I'm going to, if you guys want to, please send an email to, again, the green team at myequityzone.com. And let me just put those for those that don't know already. So send it to green team at myequityzone.com if you want training material. So all this stuff here, they already zipped it up, and if you send it, they'll just reply back to you, and they'll give you everything that we have here. Okay. So again, green team at myequityzone.com. Send an email. Just ask for tonight's training material. No, I got the answer. Thank you. Okay. Please. Okay. So I'm gonna, and part of that, if you send it to that green team, we're gonna show you kind of the resources. So where I'll send you this here, which is the Hall of Fame, where it has a little bit more on the presentation on what it is. It's just a little bit more than what I showed you there, okay? So you can kind of see the better one. And if we go to seller buy down strategy, I put 3 different links on how to create it. One is actually in that Hall of Fame, which is right here, the seller buy down. The other one will show you how to create the seller buy down flyer. And again, I think there's a free trial. You guys want to just test it out and play around with it, see if it's worth it. So this is a 12-minute video on how to create that seller buy down flyer. And if we look at this one is a YouTube video. If for whatever reason you can't log in, there's a YouTube video here. It's the same thing. It's just a YouTube here, and it tells you what you're going to learn here. Okay. And I think that you guys should learn this, at least the seller's buy down strategy, especially in the purchase market. You just come out there and kind of show them. And people right now are looking for open house flyers. They're looking for seller buy down strategy, maybe waiting period. I'm working on that. Waiting period after derogatory foreclosure, bankruptcy, short sale, and would do a flyer for that. Down payment type of program, low down payment. You know, we got the 0.5% down payment. We got the $1,500 down payment. We got the 3%, 3.5%. We have all different type of down payment program. Real estate agent like it. They want to have as many financing options as they can, and you can co-brand it with your information on it. Edge 101 will tell you what this is all about. Why should you even sign up for it? What can you do? But I gave you kind of the end product. They will kind of get a little bit more nitty-gritty and show you the back end. But if you want to, it's a 40-minute. It'll tell you the difference between the Edge and RateWatch. On here, there's a training video series, and it has everything from the rent versus own. How do you change your profile, the photo here, and the logo. So all that stuff that you're asking how to change, I think somebody asked the question earlier. They'll give you training videos on here. So you guys wanted me to go over the template website. Those two websites are called vlender.com and also alamode.com. So alamode.com is I think $300 a year, and then you have your vlender.com, which are the two, and then the one that I use for mine is 220marketing.com. So they have these here. Okay, so those are the one that you can use, and they have secured loan application, online loan application. Okay. Yes, it is 220 marketing, 220marketing.com. All right, so I'm going to wrap this up on this part. Here is the, if you sign up for Mortgage Coach, this is the value that I found, and I attended every week for about 2 years. Included on that, and it was called Mortgage Coach for a reason. They have sales coaching every week on Tuesday, and actually, if you want it, I'll include the link. It's just a link, and you can attend it. It's the same link every week. I don't know why they don't change it, but you can attend it every week, and that way you can get a feel for it. The sales strategy every Tuesday, they introduce kind of like over the years, they came up with the total cost analysis, rent versus own, the seller buy down, open house flyer. So they talk about all these strategy that people are doing within their community. What that means for you is that if you hear the strategy that's being done in the Midwest and the East Coast, you can actually do it for the first, be the first one that do it here in Sacramento on the West Coast or wherever we are in California. So you can have an upper hand on seeing what works over there. So they have a sales strategy. They have all type of renowned leaders and mortgage professionals go on there. Really top-notch people that go and speak and give some sales training or at least sales ideas. So every Tuesday, I'll include the link on there. If you guys send it again there, they'll send it to you tomorrow. If you want to know how to do something that isn't in one of those training video, Mortgage Coach does do a how-to every Thursday, 9 to 10. And that's what I like about them is that they do it consistently every Tuesday and Thursday. Then the RateWatch, there is a video that will show you how the RateWatch work. For those, they're going to explain it much better than I do. So I wanted to show you this here because I was hoping I have my computer, but based on experience, my computer kind of quirky here. So I'm going to show the video here. I'm going to plug in the speaker. hopefully you guys down there can hear it. Can you put in chat box would be great. You mean the text? Okay, let me just do this here. We're talking about the lenders. Here's alamode.com. Oops. Let's see here. And then vlender.com, 220marketing.com. Okay, so I just sent in the text, the chat box, the website. I think that's what Scott requested. If that's not what you're looking for, let me know. Or I think you might be asking if I can just copy this whole email. I can do that too. And there is also help with the Loanshifter webinar. A lot of these things, guys, if somebody can do the training, I'd rather them do it. But the other training I gave to you, the first 6, those are internal process that I've created, and then I've taught on those. But a lot of these, I don't want to waste your time if you're not interested. But this one, this RateWatch, I do want you guys to watch it because you need to know how the market moves, and I want you to see how valuable this tool is. Okay, so I'm going to plug in the sound. Not sure if you guys can hear it back there. If this is going to be static, this is the only way I know how to get the audio across. So bear with me. I'm going to pull this up here.
Is there a cost for a mortgage coach, or is that
RateWatch.
mortgage coach?
What's the cost?
Yeah, is there a cost for that?
There is actually. So a mortgage coach, and you'll see that as you add these tools up. I think it is worth it, but the cost is about $90 a month. But you add that plus your Loanshifter, $70 a month, and you add your Salesforce, another $100 a month. Again, just grow it as you grow your business, and I wouldn't jump head in first. Just close the deal, and as you need it, sign up. But these are all tools that eventually you guys should get. So on here, the RateWatch is it's combined. They used to do it separately. You were able to do the mortgage coach for $40 a month, and then the RateWatch for $50 a month, and now they just said $90 for both. Okay. There is another alternative to mortgage coach. If, let's say, you don't want the whole sales presentation and you want to just do the rate monitor. So let me do that before I play the video for you. Is that there is the mortgage coach call it RateWatch, and then there is a Market Watch. I take it all back. It's called MBS Live, not Market Watch or MBS. It's called MBS Live, and this one is a little bit cheaper if you just want the rate monitor instead of paying the $90 for that sales presentation tool. So you can do that $38.95 a month, or you can pay it annually. Okay, and this one has actually a lot more fancy stuff that you can do. So you just want to do the rate alert, you can do that. So MBS Live is one of them. There are many of them out there. This rate alert is another one. So rate alert is another one that is similar to that also. Okay, and all of them have their own thing. I don't know what this cost is. I think it's like $60 a month. It got a little bit more. So out of the 3 choices that I would recommend is either tbwsratealert.com. So TBWS, it stands for Think Big, Work Small. So Think Big, Work Small, ratealert.com. And then you got your MBS Live. And then, of course, you got your RateWatch, which is part of the Mortgage Coach. That's enough. Those are the top 3. And you just probably pick one of those 3 there. Sales presentation tool, there's a lot of other ones too, but I wouldn't even recommend any other one. This one is just the best one for your buck and to do that. Okay. Homework for all you guys. I want you guys to do this right now tonight. Is do this. Go to Mortgage News Daily and sign up for that free newsletter. Every day, depending on how many alert you want, it will tell you everything there is to know about mortgage news. Okay, sign up for it. If I would sign up for all of them, and then just manage your subscription and start unsubscribing to the one that is less relevant to you. Okay? So on the Mortgage News Daily, I don't know why it's not going. And it's free. Mortgage News Daily, and it actually does have the alert on the rate change, but it's not as instant as these alert. As soon as these alert, you know it, and you got a 15-minute head start. That's why people sign up for these. Whereas if you get in the news, it's already happened. It's old news. Okay. So I'm not sure why it's stuck, but go to mortgagenewsdaily.com, sign up. There should be a subscription side on the left or right, and they'll give you all these subscriptions. So let's understand why we need to pay for all these service or be alert, with these here. And for those that don't want the RateWatch, the good news is that it's already built into your Loanshifter. Let me show you. So when you sign up for Loanshifter, which again, if anything, to be a loan officer, you need to pay the $200 annual fee for Calyx Point. And again, I call it Calyx, but it's pronounced Calyx Point. The second thing you need to do is sign up for the credit account. Depending on what branch you are, if you're at corporate, you need to get under the Clear Choice. Most people will be under Clear Choice, and then we have a second credit reporting agency called Old Republic Credit. Those are the two bare minimal necessity that you need to be an acting loan officer. Then the optional things are the Loanshifter, which I highly recommend instead of shopping for loans, for looking at rate sheets. So I'm going to show you this. And I think I did, but for the sake of this webinar, we'll show you here. So when you log in, the first thing you'll notice is that your parameter, you put down what you're looking for. And you can save scenarios and all this stuff here. But when you go down, look at that. RateWatch is included for free. Okay? The difference is that this does not alert you if there's a price change. And that's why the RateWatch, when you install on your desktop, it'll pop up, it'll announce this, it'll tell you. But for the most part, it has everything that the person said, minus the lender price change. Okay, so you have your candlestick here, you can pull in, you can do the year date, you can do everything that was shown there. You can add the different moving average date, you can put those. So everything that you've seen is included in your Loanshifter account. It's just that you will not be alerted whenever there's a price change. And really, that's why you're paying for it. So you can beat the crowd or beat the lender from the pricing. Okay, so this has all this here. So if you are starting off and want to kind of understand the market, just go with this. And as your pipeline start building and you're managing now not only 5, not only 10, maybe 20 loans at one time, one bad move, and if you got refi client, you might have 0 loan if the rate jumped up like it did in May, right? So make sure, and this one here, if you wanted to stretch it out, this one gives you a little bit more flexibility than the one on the software. You can drag it there, okay?
How much is Loanshifter again?
Loanshifter is $59 for the basic, which is this here, and then additional $10 if you want to integrate with Calyx Point. So Calyx Point, if you put your information there, there's an interface button, and you hit interface, it'll transfer all that information into, so you don't have to do double data entry. That's $10 extra a month, and I recommend that too. And if you want that flyer, that open house flyer that we were talking about here, I think it's like $7 more a month, $7 to $9. Don't quote me on that. But it's less than $10, and that's just kind of that report. I made a bunch of kind of dummy one here. So you just, this will create that flyer that we showed you there. Okay. So this is built into that one too, if you want the Loanshifter. And on the one that we're talking about, actually, let me see what's going on here. Let's make sure they can hear me. How can a person apply for a loan? Okay, well, we'll talk about that in a second, Nova, when it's loan specific. I'm going to kind of finish up here, and I'll give you a call to talk about that, Nova. And then on the marketing where we did the daily rate, you can set it up. If you notice, this is new right here, rate update for realtor and rate update for today. I somehow have a feeling what I did made them come up with that, but I had a referral partner. This is what I created for like 2 years already, and then I did this. And then today, when I just kind of did the training, I'm like, that's new. But that's basically this email that we would send out, the one that I printed out for you guys. So every day they would get this email, and it's always whatever time you set it. So you can set, I put it mine between 5 and 6 in the morning. So those early birds, they can get the rate right before they start the day. And you'll notice that it does cost like 2 cents per send, but you have an allowance of $20. So as long as you don't go over that 20 and you select your referral partner, it should be within that $59 or $69 that you pay every month. However, if you start adding a lot of people and start sending it, a little bit more often, then it can exceed that $20. Okay. And on here, if you notice, they create it for you. So there's a rate update for realtors, and they have the same thing. It's kind of like that. And then rate update for today if you want to do a one-off thing for your client. We do this for like certain people who are rate conscious. So we kind of put it there, and then until they want to do it. And then as soon as they lock, we take them off. There's no reason to keep sending them and remind them what a better rate they could have gotten. So we want to make sure you remove them as soon as they lock in their rate. Okay? So you can do a lot of things within Loanshifter for marketing itself, for presentation and all that. But that mortgage coach will give you a little bit extra if you need to. Okay? So even though Loanshifter not required, I recommend it. You can actually polish up your sales presentation, keep it as the CRM, kind of send it to your referral partner and also your client. So it does kind of everything with just those 3 tools. You should be able to get up and running and maintain a relationship with your referral partners. All right, so I think I covered everything that we talked about. Let me just kind of make sure. So we covered the Mortgage Coach Edge, total cost analysis report, seller buy down, the RateWatch, the open house flyer with loan option, and I kind of went into detail with a few other things. Are there any other sales presentation tools that you guys would like to have for your real estate agent, for your client, for your referral partners? Let me check, see if any question. If you do and you guys think of it later, just send me an email and let me know, and then I'll learn more about it. So next week we'll talk about, for those who kind of attend the central processing, because I want to explain this for you guys. We do it in module. So module 1 is the basic of loan. That kind of goes together. We're on module 2, which is just making you guys a better loan officer, which with the post-closing CRM, and then also sales presentation. Then we're kind of done with kind of those follow-up. Next module 3 is for really the if you guys don't want to attend, it's fine. This is more to help you grow your business by utilizing other services. So one thing here is the hire an assistant. I covered that when we talked about central processing, which is in 5. But in 5 we covered a lot more on the title report and everything else. This one, next week, I'll be covering more on how do you actually manage these people on day-to-day pipeline meetings. I mean, a lot more detail. What do you do with your transaction coordinator? Whereas the other one, I just tell you what they do for you. So you got to manage your team, and that's what we'll be covering on how to work with them on a weekly basis and the roles and responsibility. Then this is tentative, this announcement, because it does cost a fee, and I'm trying to find a lender to pay it for us. They fly out a mortgage insurance company, and they do this full 4-hour class for self-employed, how to calculate self-employment income tax. This one, by all means, you guys should not miss this. This one, you need to know. you're not going to always run into that W-2 pay stub, very easy to calculate income. You're going to get those sophisticated, and that's the one you want. The big whales that own 50 rental properties, those are the one you want. And you got to know how to calculate those tax returns. And this one, I strongly encourage you guys to also attend, which is how to beat the competition. What I'm going to want you guys to focus on is this, the borrow pay compensation, how you're going to make more money than what the lender paid is set up. So you can make up to 350 basis point, which is 3.5%, if the state allows it, okay? And we'll introduce the terms and conditions for the on-time closing, along with the lowest closing costs guaranteed. We'll be covering that. This ongoing lender product training, I'm just going to move forward, even though I haven't got the official go-ahead to record all the videos like I wanted to. So tomorrow I have somebody, I'm still sticking to my schedule for those who are new. We're going to have a lender loan product training every Tuesday, Wednesday, and Thursday. And here's what the times are on, and I'll type it on screen for those two. So the lenders, we call it lender's presentation, okay? What the lender's presentation does is it provide training on loan programs. I don't provide loan program underwriting guidelines. They change all the time. So lenders are more than happy to come and provide you with those guidelines. They'll talk about exception, what they do best. So they're selling you guys. Keep that in mind. They're saying, hey, we do this better. But it is a very good breeding ground to get your questions answered. Run live scenarios by them. See if they can save a deal. So if you ever have deals that are tough, attend the lender's presentation. The schedule are Tuesdays from 5 to 6 p.m. That's about an hour and a half before our weekly mortgage training. Wednesdays, and this is, don't just show up. Make sure that I send out an announcement because not everybody can commit the lender. So if you're not sure, just send me an email. I'm working with, with Linda, Teresa, and working on the back office part of it. I know you guys want everything in a nice package. I don't have it yet, but just check in with me if you guys want to know it. Just I have the information. I just don't have a central place to put it. So once we have that, but just during the meantime, send that to me. Wednesdays, we do it in the morning for those morning people. We want to do 10 to 11. Thursdays, we do it kind of early afternoon from 2:30 to 3:30, and that's right before the mastermind meeting. From 3:30 to 5, and that
On here in the office?
Here at corporate, and it'll be on the webinar. So you see these links. Once we have it official, I'll send it out. But tonight, I will send it out. If you guys don't mind, who's ever attending, I'm not sure I have all your email address. Just please send me a quick email to greenteam so I can just reply to you with the link for the webinar tomorrow. Let me finish this thought real quickly. So we have our mortgage. So the tomorrow's training is actually on FHA 203 streamline loans. What that simply means are renovation loan. Okay, the renovation loan is you can buy a dilapidated home, and lack of a better term is a fixer-upper. Fixer-upper. You can buy a fixer-upper, and they can give you up to $35,000 and up to 6 months after you buy it to fix it. So for those who want to buy in an outdated neighborhood, maybe a neighborhood that is known for remodeling, like all the homes are 40, 60, and everybody's remodeling, you can buy those houses, and they give you up to $35,000. That's what tomorrow is. So there is one tomorrow from 10 a.m. to 11 a.m. and if you guys send it to me, just an email, I'll make sure to send you that link. And let me see here. So tomorrow, what is tomorrow? The 2nd, guys? Is that right? October 2nd? Okay. So tomorrow, which is Wednesday, from that, the training is called FHA 203K. Is a streamline. That's the official name. And basically it's a renovation loan. This is also useful for homes that the seller will not pay to fix, and the buyer wants to buy it, but they don't want to put money into it until they own that property. That's a good solution too. Okay. This is a this is a little more advanced program, but it doesn't hurt to get the idea and then kind of, have it in your back pocket and learn more details later when you do need to use it. But I was trying to get, the basic, your conventional, your FHA, your government, and this is kind of to give you an idea of what we're looking at is, let me see here. You know what, I don't have it, but I'll send you guys when we do that too. So it's kind of, I have probably about 30 loan program that I'm looking to provide for you guys. Okay. All right, well, thanks for coming, guys. Say 15. Let me know if you have any question. Okay, how much is the cost of running a website with 220 marketing? I think 220 I don't know what their price was, but I think I got a really good deal. I was able to negotiate with them for, I think, $500 a year, but they're normally $1,200 a year.
The link to for that one, right?
Send it.